Good day, everyone. Welcome to another episode of the Level Playing Field ProCast, where we talk about all things related to commercial real estate leasing to help small, mid-sized businesses, startups, nonprofits, and more lease commercial real estate space, whether it's in retail, office, industrial, or restaurant space, more intelligently and on a level playing field. I am your host, Dominic Green, managing partner of ATENANTco Commercial Real Estate Services, a tenant and buyer-focused commercial real estate brokerage. So, on today's ProCast, we're going to talk briefly about the elements of a commercial real estate lease. We're going to probably break this up into a little mini-series to kind of go over topics such as, as far as a commercial lease, the term, the rate, escalations, concessions, parking, subleasing, renewal options, and things like that. So you kind of get a better understanding of what all that is, what that means to you as a business, as an individual, like I said, as a nonprofit, looking to lease commercial real estate. And a lot of this stuff that we're going to talk about typically, for the majority part, gets done and discussed or negotiated in LOI. And for those who want to know what that is a letter of intent. Basically, your letter of intent just kind of goes over, hey, I intend to lease this space or buy this space if you're buying, but lease this space based on these particular terms. If these particular terms are agreeable, we can move forward into actually doing an actual lease. It's just a way to kind of knock out some of the major hiccup points and details before all the money is spent to actually drafting a commercial lease or go on that route. So, without further ado, let's begin. So, let's talk first and foremost about the term of a lease, right? Term of a lease is basically how long are you looking to stay in the space? Whether it's a short-term stay or a long-term stay. And that will vary. Typically in the office, most offices at a minimum 3 years, 5 to 5 years and more. With the advent of co-working space, you got month to month. You got a year, shorter terms. But, when you're considering your term, it really just depends on what do you see for the future of your business, both in terms of growth, both in terms of finances, right? So let's just say if you're a growing business, kind of a startup, you're kind of figuring out your business model, you're a nonprofit, you're still working to build up a consistency of fundraising from your donors. Typically probably the most important thing is you don't want to be hamstrung, so you're probably going to look for more flexibility. So that will probably lead you to going into more of a short-term lease, anywhere from maybe a year to 3 years in between there. Now, there is a trade-off with that. When you go to a short-term lease, you will be, renegotiating your lease every 3 years, every 1 year, or somewhere in between there. You also will typically be susceptible to higher rents because of that. Since you're in the short term, so depending on where we are in the market, if the market's still constantly going up, you won't have, you'll be basically paying, getting closer and closer to the market rent. Another thing that will be, it's not necessarily a downside, but a thing to be aware of is that there's going to be fewer concessions. And so if there's a space that you need that needs to be modified significantly, a lot of times the landlords won't entertain giving you any concessions or TI, or if they do, it's going to be very minimal because it's going to be a shorter amount of time for them to try to recoup that money, because TI money is not free. It is paid for. They just amortize it over your lease. So if they had amortized it, if it's a large build out, they amortize it over 3 years. I mean, that's going to be a significant change to your rate, which probably just makes it not unaffordable. So in that case, you're going to be looking for, either office layouts that you can that don't require that much, maybe remove some desk or built-in desk, or maybe add a wall or something like that. Something that's very, very minor, maybe some fresh coat of paint and some flooring, stuff like that. That's very cost effective. And like I said, just going to look for a layout that just you can kind of make do for the time being until things kind of get a little bit more stabilized. On the opposite end of that will be the long term. So you're talking, 5, 7, 10-year term lease. And typically, if you have a better grasp of your growth, of your financials, especially, you have a consistency of the business, then you can kind of start planning long term, especially if it's in a location that works best for your business, your customers, you're able to serve them. You can commit the long term to that. And then because of that, which landlords always love having long term stability, because it also helps with on their end when it comes to financing. And if they potentially decide to sell, investors love long term committed tenants. So they'll be more willing to offer you those concessions, giving you a little bit more TI, doing more extensive build out to make sure the space is fit for you, since you're going to be in there long term. And then it also gives you a way to negotiate a more predictable and overall lower rate spread out over a longer period of time. So that, you kind of get the best of both worlds of that. So all in all, it just really depends on what stage you are in your business. Should you do short term? Should you do long term? If you're a startup, especially, probably want to lean more towards having the flexibility in doing short term. But then on the back end, or while you're having that discussion, try to put certain clauses in, like expansion clauses, that allow you to expand should, if you're, just got seed funding, then you quickly went to A round, B round, and then definitely you're in your C round where you're just really about to scale. You have the ability to do that in the building that you're in by, putting a couple of these clauses in there to kind of go along with what you're projecting to happen. So that's kind of your term. Now, as far as rates, oftentimes, and it varies from locale to locale, but majority of the time, especially here in Texas, everything is pretty quoted on a per square foot basis. So you have your base rent, and that's basically what you're going to pay every month or for the entire year. And often how it's quoted is, for example, is say you're one of at least 1,000 square feet, it's going to be quoted to you, let's say, at $15 per square foot. So that's a yearly annual number. So over the course of a year, you're paying total $15,000 to rent that space, plus whatever operating expense that they have on there. Some spaces have triple nets, some are modified gross where they're just charging you for electric. And then there's different variations in there, electric and janitorial, or a couple of things in there. So, but it'll be somewhere in between that on top of your base rent. One thing you also want to pay attention to is your square footage. So really understand what's the difference between rentable square feet and usable square feet, right? So when you're actually in your suite, actually in your space, when you walk around in there, that's usable square feet. Particularly, especially in office buildings, when they tell you the square footage, they're actually telling you the rentable square footage. So your rentable square footage is going to be your usable square feet, what's actually inside the space that you're in, plus your pro rata share of the building's common areas. And so typically, what you want to do is find out how much exact usable square feet that you're getting out of the rentable square foot, and what we kind of considered, it was called a load factor, right? This kind of helps you calculate the common area space that is the portion of your rentable square footage, right? So I guess to say the easiest way to figure out what the load factor is, obviously, is to ask ask your broker, whether it's your tenant rep, or if you're doing it on your own, talking to the landlord rep, asking what the load factor is, to really determine your actual usable square footage. But to calculate the load factor, just simply ask them, hey, what is the actual total rentable square footage? And then do you know what the suite's actual usable square footage? And usually there's a printout of the suite, because the architect did the space. It will tell you exactly what the usable square footage. They can reference that to you, or if it's online, you probably can see it on there. But like I said, to get the load factor, take the total rentable square footage and divide that by the total usable square footage, and that will give you the load factor. So that would be kind of what the percentage of the common areas is being allocated to your rentable square footage. So that's really helpful, so you can really understand exactly how much space you're actually leasing in comparison, and have a better apples comparison to other buildings. Especially if you're set on a certain particular number, you're trying to rent, let's just say 10,000 square feet, and let's say a building has a 15% load factor. I mean, you're really only getting about 8,000 and some change square feet. So, like I said, really critical, so that way you can kind of design your space, layout, and really figure out how much space you need. If you need more than that, then you need to go a little bit higher to get the actual usable square footage that you need. So, one other thing that's going to be part of your lease, and this would kind of go back to your base rent, escalations. So, landlords love, especially if you get an offer from them regarding leasing space over a longer period of time, they're going to want, as we say in the industry, bumps, but basically escalations in the lease. And that's for them to stay ahead of inflation from an investment standpoint. So you'll get quotes of, every year your rent goes up 50 cents, 75 cents, somewhere in between there. So just kind of be mindful for that, and realize, kind of understand why they're doing it. Because like I said, this is an investment for them, and all part of that is they want to make sure that they're staying above inflation, so that they have a particular net at the end of the day. Because if the landlord doesn't have these escalations, they typically just going to charge higher rents to compensate for that. So it's just kind of a way to, I guess, kind of a way for them to not have higher rents, I would say. But don't be shocked when you see it, or if the landlord broker is pushing the, hey, I got to have bumps in here, because that's the reason why. Tune in next time for our next episode, or part 2 of our mini series on the elements of a commercial lease and negotiating your commercial lease. And we're going to talk more about concessions, parking, subleasing, expansion, and renewal options. So until next time, happy leasing. Follow us at www.ATENANTco.com. You can follow me personally on LinkedIn, Dominic Green, Tenant Rep Advisor. You can also follow us on LinkedIn at ATENANTco as well. Subscribe to our Twitter account, which is by me, Dominic Green, CRE. And if you have any questions or concerns in the meantime, don't hesitate to give us a call, 214-247-6211.